What's up, YouTube? It's your boy Infinite Gains, and we're back with a GME and AMC update video. We're going to be going over GME and AMC going into earnings. Of course, GME has earnings on Tuesday of this week. We're going to be going over costs and a few other stocks that we've been interested in for a while. I would appreciate you if you guys subscribe to the YouTube channel, and then also if you guys want to join me on x.com, I post a lot of updates on X, and also I do have a Discord that you can find on my X profile right here. If you want to join, you want to have access to me, I'm available all day. You can send me questions. I can chart different stocks for you. So make sure to check that out. So just diving into kind of GME on the daily chart, just from a technical perspective. This was kind of our idea previously. When price was kind of up here, we were thinking, well, we're either going to bounce from the daily 200. As you can see, we haven't really gone below it since the May move. Now, once the 200 was broke, now our idea was, okay, well, our next point of support is going to be this next fair value gap, which you can see we bounced right at the midline of the next fair value gap. Now, something to kind of note here is on the 4-hour chart. This was our point of control, and you can see that price reacted pretty strongly to it. Right here is our linear regression channel here on the 4-hour. But just something kind of interesting to note is that this was just previous support, right? This move that took us from 22.44, all the way to 34. Now, this is essentially what happened. You broke your point of control, you broke it, retested it, you had your move to 34. Now, why the rejection at 34? Well, that was simply because at the time, that was our value area high that you can see right here. It changed slightly as whenever price comes down, the volume profile changes. It was initially, literally, it was at 34.10 to 34.60. But you can see that price essentially broke that point of control, and that allowed us to move up to the value area high. That's where we got our rejection, and now price came back down to the 4-hour value area low, point of control. So now what is price doing essentially whenever we're saying this? So in the terms of your volume profile, this is essentially just where some use a different amount, but 70% of your volume is traded in this range. So the upper limit of that 70% is your value area high, and of course you have the value area low. Now the point of control is just the point within the volume range in which you have the most volume traded. So what is price doing exactly? It's essentially just trying to break out of the range, and that's why I originally said you're not going to get a short squeeze, or you're not going to get a squeeze out of GME until your value area high is broken. So that range is from anywhere to $33 around $34.10. Now I'm confident that the next time that we break that range, that we're going to essentially break out of that range. So that's kind of what we're waiting on now. Just from a short-term technical perspective, you actually have a window of opportunity here because your stochastic is in the upper range, and you can note, like, whenever the stock is ready, you can stay in the upper range and have this kind of a extended move, like what occurred in the May. Now, our next point that we must break is the daily 200, and that's this red line right here. Now, that's just a simple moving average. I have an entire video on what simple moving averages are. They're not very complicated. I'm sure everyone knows what they are. Now, that's sitting at 25.12, so that's our first point of resistance, and it's no coincidence that is now, this is a fair value gap, and it's a bearish one potentially. So this is gonna be resistance. 25.12 will be resistance. Now, it'll be extremely bullish if we can recover the daily 200. So that's essentially what we're looking for. maybe going to earnings. So if we have a bullish earnings, that is certainly something that we want to see, is a break of the daily 200 sitting at 25.12. And then, of course, our next major resistance on the daily is going to be our point of control. My idea is that if we can recover the point of control on the daily, you're almost guaranteed to revisit the value area high at 34.10. So, 27.77 in that range is going to be our next major resistance on the daily. Once you've recovered both the point of control and the daily 200, you can, confidently get pretty excited. Now, that takes us to the, back to the 4 hour, on our 4 hour chart. Now, leading into that we just talked about on the daily, on the 4 hour, you just want to see a recovery of your value area high. And where is that? It's no coincidence that it's, again, at 27.77, right? Your different volume profiles over different time frames really kind of work together. So on the 4 hour, you're bouncing off of your point of control support, and you're gonna go back and retest the value area high at 27.77, which is on the 4 hour chart. But this coincides with the point of control on the daily chart. So 27.77 is going to be our next kind of major milestone for GME here. Now, something that I'll say, so this is just kind of our idea here. If you can accomplish something like this, and it may not be a straight line, it may be kind of choppy, it may be ugly, but if you can recover this value area high, and we go back to the daily, that's your point of control, that would be beautiful. And you want to see a break of the value area high. Once the value area high on the daily chart, which once volume kind of pushes price upwards, it may be around 34.10, 34.60 by the time that price is actually up in that range. That is extremely bullish. It's extremely bullish. But using that point of control, I want to show you something. Using that point of control is going to be extremely bullish as well, because what I think is essentially happening is we're creating a micro. Right here is a micro May move where prices gets trapped under all the simple moving averages, which you can see here. Prices literally dip below all the simple moving averages, and it'll build price out in a way where we come up, we break the daily 200 and the point of control, like literally in May, and then that's when you have your extended move. And you're kind of building a micro setup for the exact same situation here, where you're trapped under all your simple moving averages. Now, we just broke the daily 20 simple moving average, sitting at 23.82. It's that blue line here. So price is essentially creating a macro May move where we have the potential to not only break the daily 200, but then recover the point of control as support. That's extremely bullish. If I saw that happen, like, I'm YOLOing call options. I'm not, like, no bullshit. Like, I would actually YOLO call options if I saw that. So this is going to be extremely, interesting going into earnings. Now, something I'll say about earnings, and something else that we'll go over here. Throughout GME's history, as you can see, earnings have not been that great. You have a lot of just red earnings now. In recent, we've had more green than red earnings. So it's not giving us that kind of. Obviously, this earnings is highly, has a lot of speculation, because they have $4.6 billion in cash, and we're kind of assuming that they did something with it, or maybe they have some kind of something to introduce. I don't think previous earnings is really going to give us a kind of anything to kind of go off of. Now, something I will say that's kind of interesting here is GME has not really gone this long without some kind of move. Here, before this pop in 2020, this only took 227 days roughly. Now, from this bottom, even if we extended this all the way over, from this bottom all the way, so from this move all the way to MOAS in its entirety was roughly 291 days. from this double top to this this move took 146. From this double top down to this kind of gap up move to the daily 200 took 224 days. You know, even if we account from like this entire move here, it took 336 days. Like, we're currently sitting at roughly, like, from this peak, if we do this peak to now, roughly 312, 311 days. So that's an incredible amount of time that GME has essentially just been trading in this range, and it hasn't really popped yet. I mean, that's, you know, obviously it doesn't really mean anything, but it kind of does in the same sense that GME really has not gone this long without just doing nothing. So it's just something kind of interesting to think about. Just kind of going off of, you know, GME's price history. But, you know, kind of another thing, if we go back to the weekly, again, whenever we talked about that 2777, that the point of control on the on the daily chart, this is your weekly chart, and as you can see, now the original MOAS move occurred because you bounced off your weekly value area low, and then you broke your weekly point of control. Now, the most bullish thing that you could do on this chart, which is something that we almost accomplished right here, is to break your weekly value area high, and that's sitting at let's delete that, and that's sitting at 28.27. So that's kind of our next stop. 28.27 to 27.77. I would say on the daily chart, it's a lot more important to recover 27.77 because that's your just daily point of control. That's just it's just super simple. Like, it's not complicated at all. But, you know, on the weekly chart, we are finding support. These are not Bollinger Bands. I guess just for the sake of simplicity, you could just call them that. They're based off of median price action and volume and a bunch of different stuff. But as you can see, they work really well. We bounced off of this, off of our bands on the weekly chart, and then you can also see here that our weekly MACD seems to be flipping over. That the histogram is flipping, or is beginning to flip. So that's an extremely bullish thing. If we go up even to the monthly chart, we can see that look at this. Look at that. That is beautiful. A perfect bounce off your monthly fair value gap. It's beautiful. It doesn't get better than that. And of course, our bands are working as well in conjunction. So just a beautiful monthly chart. It just doesn't get better than that. It just doesn't get better than that. Whenever your weekly, daily, and your monthly are all working together, it's just a beautiful thing. And of course, this is our monthly chart, which the original May move actually happened because it bounced off of your value area high on the monthly chart at 1145. So again, this shit works. Trust me, volume profile works. It's the best tool in the game. So when you're thinking like, well, I mean, yeah, if we recover the point of control on the daily at like 27.77, like, but who cares? It really works on multiple time frames. Like, trust me, it works. And it works on a daily and a monthly, and they all coincide with each other. So that's something I'd be looking for going into earnings, is a recovery of the point of control at 27.77. And do not forget the daily 200. Moving on over to AMC. Let's get that. We don't need this. Yeah, we've kind of just been going over this multiple times. This essentially 2021 fractal, just taken from here essentially. It's like an M-shaped double top with a double bottom. And it lines up almost perfectly, where to the point like current price action, we created this lower low, and it's kind of beautiful. So your next point is you need to recover the value area low at 324, and once that's kind of recovered, I have a lot more confidence. It would look something like this. and then you have a lot more confidence of returning back to your point of control, back to the $5 range. Essentially, that would be kind of the same. If we're kind of correlating to GME, GME's break of 34.10 would be the equivalent of AMC's break of 590. So that would be kind of the equivalent. If you're looking for MOAS on AMC, you need 590 to break. So that's kind of the equivalent of GME breaking out of its volume range. So that's what I would say. Like, if you're just look for a recovery of 324, if we do that, your next point is just going to be the daily 200, your point of control, and then an actual breakout would occur above 590. So that would be an actual breakout for AMC. But that's kind of what we're looking at here, and you can kind of see the similarity where you got this rejection from the daily 200, which you can see happen here, and you come back down and you make a double bottom, but it's like a lower low, and it's essentially just the same thing, except this time instead of rejection from the daily 200, you just reject it from the daily 50 SMA at 326. Or no, that would be at all the way at like 375. But it's eerily similar. If you're gonna ask for some kind of price target on the weekly chart, it's kind of plain and simple. If on the weekly chart you break 434, and obviously this is gonna sound crazy, but 4151 is gonna be a magnet, and that's your value area high on the weekly chart. If AMC is in a squeeze, I don't see how we don't make it to at least the value area high at 4151. I just don't see that. So that's GME, AMC. Going over to costs. I actually loaded up on costs here a few days ago. So it bounced. Where did it bounce? At the previous point of control at 464. Right here. You see this? You see this polyline right here? This tracks the previous point of control, and literally, I put it on my chart. I was like, we're going to bounce here at 465. And I think I talked about that in my previous video. But our next kind of struggle is going to be to retest the daily 200. We will do this in time. I guarantee you. And that's the thing. It's like, it's currently at $5. And I know that we're going to retest the daily 200. And I know that we're going to retest the point of control. So for me, it's just a no-brainer. But just looking at the chart, you want to break out of this range, and you want to retest the point of control like this. If we go to the weekly for a macro breakout, that's going to be, again, your point of control this is the weekly control, and that's sitting at 1790. So if you break 1790, you're pretty much going to break out, because at that point your only next resistance will be 2486. And it's just not enough resistance. So your next point for a breakout is going to be really 1790. Like, if I saw 1790 on cost, like, that, it's going to the moon. But really our next battle is to really recover the daily 200. I'm not exactly sure how it's going to look, but I think a lot of people are sleeping on this stock. For me, even if we become extremely bearish somehow, which I don't see, I'm bullish here, as soon as we recover the daily 20 SMA at 525. But even if we become extremely bearish, I don't see the stock dropping below the value area low on the weekly at 333. I don't see us going lower than that. In fact, I don't even see that happening. But for me, the risk to reward is clearly there whenever you're talking about a stock that in 2021 ran over 15,000%. That's incredible. 15,000%. Yes, it doesn't have options, but who gives a shit? Do you even need options whenever you're running 15,000%? And we can't ignore that it literally is a copy of GME's chart. You ran at the same time. You had the same macro downtrend. You ran at the same time in May. There's clearly a correlation here. And it's an incredible correlation. So if you're bullish on GME, you might as well take a position in cost. Not because, just from a structural perspective, it looks good, but there's clearly a correlation here. So I have a decent position in costs as well. I'm not sleeping on it. I'm not sleeping on costs. we will revisit 1790. We will revisit that weekly control at some point. So that's kind of going over the quote-unquote meme stocks. If you're still watching, I would appreciate you guys. And again, if you could sub, if you could check me out on x.com. And also, if you want to comment ideas of what you want me to go over, I can go over into really more like sophisticated topics. If you guys want, like, I could go over like a video of like, what are options, a basic options beginner educational video. Then I could go over more, maybe, more complex strategies with options, like calendar spreads, short-term straddles, like debit spreads, butterflies, different, more like really complex option strategies that you could implement into your own portfolio. So I'd be glad to kind of make educational videos on that. I'd be glad to make educational videos on anything, different indicators and things like that. So. But I need your feedback. If you guys want to comment below, like you guys are kind of driving the ship here. I want this to kind of be something that you guys are requesting, and I'd be glad to do it. But hopping into the rest of the video, of course we're extremely bullish on HIMS. We talked about this, that we bounced off the daily 200. That was our goal, and that's why we took a position in my last video at the daily 200. The daily 100, which is this green line here at 32.50. And then we also recovered the value area high on the daily chart. That's extremely bullish as well. I believe your next destination is this fair value gap at 38, 36. And then, of course, our stochastic RSI still has a lot more room to run. Yes, I'm extremely bullish on HIMS. They have too many ways to compete. Accessibility to healthcare it's going to be a tremendous industry. I mean, it just has so much room to grow, and especially if you have a lot of capital and you're in that industry, you have the opportunity to develop your own tech, like in-house tech, and then also you're kind of imagining, well, what if they produced their own pharmaceuticals, right? They could produce their own medicine. They have too many options on the table to kind of ignore that. It kind of reminds me of Robinhood. Like, again, Robinhood has just so many ways to kind of compete. Obviously they're in a completely different industry, but it kind of reminds me, like, they have the same kind of flexibility and the same kind of robustness as a company to kind of dive into, like, just so many different possibilities. I can't ignore HIMS. I just can't. Like, I'm longing it back to all-time highs. We'll go over, I guess, SHOP really quickly. I mean, I don't miss. Like, we were longing SHOP from the daily 200 at 88.61. Like, it's just too easy. Again, e-commerce isn't going anywhere. Now, I did kind of want to talk more in detail about this one. IONQ. Now, this is an interesting opportunity as we're right at the daily 200, which by a technical definition, over the long term, this would be a great opportunity to buy. The stock has, of course, dropped 68%. That's a lot. 68% is a lot. So this is by definition a discount buy. Now, should we buy it? Well, maybe if we can do a little bit more research. I mean, if you want to research the company yourself, but maybe we could just look it up here quickly. Let's just take a quick look at, maybe their financials. So market cap of 5.317, but let's really just look at their profile. Just so you guys can have an idea of kind of who they are. We go to inq.com, so quantum computing, and then now this is, so obviously if you're a believer in kind of NVIDIA and artificial intelligence, and this would be an interesting stock for you to kind of research here. And they have a list of, like, an incredible list of different customers as well. Now, actually, something I kind of wanted to bring up is this kind of next IPO. What is this? NVIDIA backed company. IPO. What is it? CoreWeave. Yeah, CoreWeave is IPOing. When is this? I'm not exactly sure when it's happening, but just kind of a heads up. This is kind of this company's backed by NVIDIA, so do some research into them as well. This might be an opportunity. It's something that we'll just kind of keep our eyes on for now. But these kind of tech and AI stocks have kind of suffered greatly as NVIDIA kind of is suffering as a stock right now. Wow, we called the absolute top up here. Like, you can't say that we didn't, because we said it about 20 different times. Now, something I'll say with NVIDIA is that, okay, it's actually finding support at its value area high at 116, at 116.68. Why won't this change? So actually, I would actually be bullish on it until we retest the daily 200 at 127.76. But you can kind of see as NVIDIA is suffering, more of these kind of AI and tech stocks are suffering as well. I mean, this one was down over 68%, but whenever we're at the daily 200, I'm willing to give this thing a shot all the way back to the value area high. So I'd be willing to long in this zone back to at least $32. So that's kind of what I see for IO and Q. Of course, Snow we talked about in our previous video, and it's literally tracking what we just talked about. Your initial resistance will be at the daily 100 at 161.47, but ultimately I believe this is a long-term growth stock. I believe you're gonna recover 173.73 on the daily chart. I'm just bullish back to all-time highs. Now, Oscar Health is something interesting that we're looking at. This kind of it does look a little bit weird, but it is kind of like a Wyckoff reaccumulation. And I think, well, you have a chance to kind of recover this value area low at 13.11, but technically we're below it. Technically, if you don't recover it within a few days, then you kind of have the risk of just getting rejected here. And then this is where you would make your spring. Is right at this fair value gap at 10.22. If this does happen, like right now I don't have a position in Oscar Health, but if we were to go down to 10.22, then I would gladly take a position. I believe that would be your spring, and you'd have a recovery that would look like this before you actually broke out of this range. So something just to kind of keep an eye on going into the future. Now Tesla, we long Tesla. We literally long Tesla at the FOMC. So now I will say this thing needs to recover 254.22, and it has to probably do it very quickly, because your stochastic is already like really in the upper range here, and that's not a good sign. What you need to have happen is you need to recover this. You need to do something like this. Like, you just need to have some kind of explosive move, boom, and then like kind of dip back into this value area high while like RSI resets. That you need that to happen. Like, you basically need Tesla to start moving bad because you're kind of running out of time here for recovery. Like, before it's just kind of like a dead cat bounce. So for Tesla, like, I'd say I would just kind of wait it out. I would say if we're able to create strong support at the value area high, like around 255, then I'd gladly hop in. I mean, I already have a position down here. I'm not really that concerned with it. So and again, I don't. The kind of narratives that you see in the news are always gonna kind of align with the stock price, and it's all bullshit. It's really just mass psychology. I'm long Tesla back to all-time highs. I have a position in my portfolio, and it's just a cash position, no options or anything like this. But I do have a position in Tesla at this range, and I'm holding it back to all-time highs. So that's my opinion on Tesla. Like, if you want to talk more short term, it is kind of you do kind of just need a short term bounce to at least 261. Preferably higher, and then you can kind of come back down and retest the value area high. But in the short term, like long term, I'm completely long Tesla. I have no problem longing Tesla. I have a position in Tesla in my cash account, so I have no problem with that. But okay, well, we went over a lot of information. But again, of course, just going to earnings, just kind of, I think overall earnings should be bullish. But, of course, we're kind of looking to that, kind of wow factor from Ryan Cohen. And of course, I'm not sure what's going to happen, but, either way, I think earnings should be relatively bullish. There's kind of no reason for it not to be. I don't think that he's going to announce like another dilution or anything like that. So, I don't really see any kind of reason that earnings should be bearish at all. And you can kind of see that, like, going into options expiration on Friday, you saw, a lot of volume coming in. Well, people were trying to load the boat before earnings because it's kind of like a no-brainer. Like, earnings is probably going to be bullish. Now, if it happens not to be, and then in a few days, for some reason, price starts to be bearish, we've kind of moved too far for this to be some kind of, like, something like that. That just looks unusual at this point. If we hadn't had the Friday move, then it could have been manageable. But the Friday move kind of ruined that. I think what you're doing is you're literally just creating some kind of macro May setup here, where like you're going to recover like the daily 200 to do something like this. It's going to be like more vertical. Because I think your low has already been put in, so I don't see us coming back to retest that. But we went over a lot of different information. Again, if you want to join me on x.com and if you want to join me there, subscribe to the YouTube channel, of course, and I'll see you guys in the next one. And peace out.